Hi, everybody. Thanks for joining us. My name is Roland Schuster. I'm the managing principal of the Schuster Group and president and founder of Tango. So we greatly appreciate you carving out some time for us on Inauguration Day. I think we have a really good presentation to go through today. This is the second in a series. I'm assuming a lot of you were on our first session. We had Andrea Barton-Reeves, who is the CEO of the Connecticut Paid Leave Authority, talk about the program at length, and then talk about the sort of virtues of working with the state for this mandated coverage. We're going to give you a glimpse of the other side. So there is another alternative, and it's in the private market. So we have Margaret Guerrette here with us, and I'll introduce her in a moment. And she's going to walk through the benefits of looking at this through another set of lens. Is it best for your nonprofit to access these type of programs through the state, or is it better to go through the private market? And we'll go through the pros and cons of that. We do have a third session coming up in a few weeks that will talk about sort of the fallout that you want to really be conscious of as you look at the enactment of these laws and how this is going to affect your workforce, some of your other benefits. You know, this is not just one adoption of a law and there's no domino effect. This definitely has some rippling through some of the other programs you offer, and we will be addressing that in an upcoming session. Joe, could you flip the slide, please? Thank you. So before we get into the meat of the presentation today, I just wanted to give everyone a quick update as to where we are as we go into 2021. Right now, we have over 1,400 nonprofit organizations that have joined Tango, representing over 160,000 people in the sector. And when I formed Tango, the thought was if we could band enough nonprofits together, we could create scale in the market to do some very, very impactful things. And fast forward to today, we've hit that tipping point. So I'm very proud of what we've built. I want to thank all of you that are part of Tango for giving us the ability to do business differently, do it with impact, do it with purpose. You know, with scale brings power. And our initiative is to take this power, if you will, and deliver some unique things to the marketplace, to the nonprofit marketplace. Things like preferred professional services. All of our partners are providing their professional services on a preferred basis. I encourage you to take a look at our suite of services. They are geared for the nonprofit sector specifically. Education and training. We are highly committed to continuing our efforts in this field. Last year, we ran about 50 sessions, and we're going to continue on that pace going into 2021, going deeper and wider with respect to topics and content important to you in managing the business.
I sent it to you because.
And lastly, mission support. We have a foundation. Many of you have heard about the Tango Foundation is a 501c3 organization, and we raise money in a non-competitive way with the market. Through our connections in the financial services world, the insurance world, and our partner group, and some people who just simply like what we're doing. We take these dollars and we award scholarships each year to rising stars in the nonprofit sector. So we encourage you to go to our website and take a look at what we have. There's a section on the site that talks about the Rising Star Scholarships. If you have someone in your workforce who is on the fast track, I encourage you to nominate them. We will be awarding our scholarships in April this year. And we tend to have 2 to 3 each year to help train somebody within the nonprofit ranks so that they can be more impactful within your organization. So please don't hesitate to nominate a rising star if you have one. Our diversity, equity, and inclusion initiative was launched last year for reasons that we all know. and it is really starting to take off. If you are concerned with the culture you have within your organization or want to learn more about the adoption of a DEI program within the ranks of your nonprofit, please talk to us. We also have programs that are really geared towards board training, helping your board be more familiar and more adoptive of these practices. So we have a great team that is spearheading this initiative and some really, really good content. And lastly, I just want to share with you our employee benefits platform. This was devised by the Schuster Group. We have spent a decade building this, and it's really creating some impact out there in the marketplace. We have proprietary health insurance offerings that are not available through other organizations. We've created these specifically for Tango members. They're all designed to provide a higher level of benefits for lower costs. We also have life, dental, disability, and voluntary programs. There's a prescription drug discount card that's completely free. In fact, I had an employee last week come up to me and say, hey, that prescription card you gave me, I really didn't think much about it, but I needed a script, went down to CVS, showed my card. It was a $100 prescription. He ended up paying $25. So he thanked me for that. We have hundreds and hundreds of these cards that we are happy to ship off to you guys. We cut a deal with a pharmacy benefit manager for the benefit of the nonprofit sector in our Tango membership. So there's no cost, there's no catch. If you would like to distribute these to your employees as an additional benefit, we are happy to provide you those. And then lastly, there's a wellness program we have spearheaded in partnership with a company called WellSpark, and we're going to be doing some upcoming seminars on this topic. WellSpark runs the state of Connecticut's wellness program as well as the city of New York. And we have tangoized that, if you will, where we've put in to play a real emphasis on emotional wellness and behavioral well-being and those kind of things, those intangible things that traditionally are not part of a physical-oriented wellness program. We think it's really, really neat. We're getting great feedback on it. And if you'd like to learn more, please contact us. So that's what we have going. Please stay tuned to Tango. We're going to be continuing to drive more resources to the sector. Again, I want to thank all of you for being here with us today and being a part of our growing community. Next slide, please. So we're going to do a quick overview of the law. And then we're really going to get into the nuts and bolts of private versus the state plan. And then as we go along, I think Margaret's going to want to have questions posed as we go through the process, or the presentation. So please speak up. If you have questions, we're here to answer them. And next slide, and I'll introduce Margaret. So Margaret Guerrette is a product manager at Guardian, where she is responsible for product development and management of group disability and leave products, with a heavy focus on state-mandated paid medical family leave programs. Before coming to Guardian in 2019, Margaret worked at Unum for 10 years in the claims, law, and product organizations. Margaret holds a JD from the University of Maine School of Law in Portland, Maine, and a BA from Emmanuel College in Boston, Mass. And I just want to say, Margaret, thank you very much. Guardian is a fantastic insurance company. We do quite a bit of work with them. And I am very thankful that you can carve out some time for us and enlighten our membership with what's happening from the Connecticut Paid Family Leave Act private marketplace standpoint. So take it away, Margaret, and thank you.
That was a tongue twister there.
It sure was.
I'm happy to be here today. Thank you so much for having me. I love talking about paid family and medical leave for a few different reasons, but one, I truly believe in the programs and what they encompass. And two, I really understand the complexity here from an employer perspective, and especially multi-state employers, right, as more and more states come into play here. So this is something that I've really started to specialize in. I enjoy talking about it. And as Roland mentioned, I'm happy to take questions throughout, so don't feel like you need to hold them to the end. If there's something I say that just isn't registering or isn't clear, feel free to chime in or use the chat window as well. All right, let's dig right in. I know that you had some time with Andrea, and what a treat. She is so great. I'm thrilled to hear that you got a program overview from her. So I won't spend a ton of time going over the particular details of the Connecticut program, but I think it would be good to spend 5 or 10 minutes or so just regrounding everyone. And there are a few pieces to the program that I like to call out for a few different reasons, and so we'll talk about that as well. All right, we can go to the next slide. So when Connecticut passed their paid family and medical leave program, they followed suit with Massachusetts and Washington and a few of the more recent states in setting up a program that has these sort of 2 big buckets of leave types, right? So there's the medical leave, which is leave that an employee can take for their own health condition. And then there's family leave, which is essentially leave to care for somebody else. Now, depending on the state, the types of leaves that are allowed under that paid family leave component can vary. And Connecticut's no different there. They have some of the more traditional types of PFL available, and then they also have a couple of unique leave types that are for them only. So bonding, caring for a sick family member, military exigency, those are all ones that are pretty commonplace now, and we're seeing under these paid family and medical leave programs. But Connecticut gets a little bit different here in extending their program for organ and bone marrow donation. And then family violence issues. So you'll see that most of the durations under the programs are 12 weeks. The exception here is that family violence issue is 12 days. I get questions on this a lot because it seems a little funny, like why would that be different or less time? And the rationale here is there is currently an unpaid Connecticut family violence leave law in place that affords no payment but job protection. So the addition of that leave type in this bucket was just an extension of that, and they wanted to align the durations to work with that law so that they didn't have to make any adjustments to that law. Intermittent leave is allowed under the program for both types of leave. We expect that we'll hear a lot more from the state in the coming weeks as they finalize rules around that in terms of what that will look like, minimum increments allowed, and things like that. The one other thing I'll mention on this slide under covered family member at the bottom here, most of you on this call may already be aware of this, but Connecticut went a little rogue here, to be totally honest. New Jersey is the only other state that's done anything quite like this, but they extended the definition of covered family member to include anyone that an employee can show they have a close association with. So I'll say that one more time. An employee can take paid family leave under the program to care for anyone that they can show that they have a close association with that sort of rises to the level of a family member. It's caused a lot of angst, specifically at the employer level to date. I think there's a lot of fear about how employees will use that and possibly even abuse the program. And I'll just say, Andrea may have hit this with you guys when she talked to you about it, but I think the state is very aware of these concerns, and they definitely have it on their agenda to put some rules around how this will be tracked, how it will be checked, and then how it will be implemented to avoid the possibility of misuse. But it's just something to be aware of. And really all of the covered family members I highlighted in the green font here are all ones that are more expansive than the FMLA. So I like to call that out for folks as well, because it is going to set up situations for your employees where they may be eligible for a Connecticut paid family and medical leave claim, so payment under the program, and also job protection under the program, but they may not have an FML eligible leave. And it's just important that employers have an understanding of that so that when the situation comes up, they know what that will look like. They'll be able to explain to employees why there's a difference. And then just so that they have that overall knowledge themselves of situations that will come up like that. All right, we can go to the next slide. So in terms of the way the program is structured from a benefit perspective, Connecticut has really kind of upped the benefit percentage compared to what we've seen so far to date. And they've become the first state to hit a 95% income replacement for certain employees. So Oregon actually next, year after Connecticut will become the first state to hit 100% income replacement. So we're not quite there yet, but we are seeing an overall trend as more and more states are implementing these programs of sort of upping that benefit replacement percentage so that employees can get more of their pay replaced when they're out on this type of leave. So Connecticut followed Massachusetts a little bit in terms of a staggered benefit calculation. So it's going to be your lower wage earners that are going to get up to that 95% income replacement. And then as employees go up in salary range, they get less percentage of their income replaced. So in that benefit percentage section there, that's the exact rules. I won't get into that too much because it's quite a bit to plot out. But just know that the general concept there is your lower wage earners are going to get at that 95% income replacement threshold. And then as they go up in salary, they're going to have, maybe 80, 70, 60, 50% of their income replaced. There's no elimination period under the Connecticut program. And that's something that I'll call out for a minute here because I think, the state has an understanding of that, but I think the private insurance industry understands for employers what that means a little bit more. And it seems like a simple thing, but there's quite a big impact there. So your employees that file for leaves under this program are going to have access to their benefits starting on day one of the absence. And that's really different than most group short-term disability plans. That's different than any other state mandated paid family and medical leave program we've seen so far. And it creates somewhat of an urgent time crunch for claim filing and different things like that, because you're going to have employees that want to access these benefits. And then as soon as they're able to, they really need to start getting paid. So it's going to create some interesting scenarios with the state and with private carriers in terms of making sure that payments are timely because they'll be due pretty much right when the leave starts. The maximum weekly benefit is 60 times the state minimum wage.
Going on right now. I don't know.
Oh, is there a question? I'm sorry.
Go ahead. I think somebody's phone wasn't muted.
Came off mute. Okay, happens to all of us, doesn't it? So the maximum weekly benefit is 60 times the state minimum wage. I didn't put the exact figure in here because Connecticut is in the middle of a 5-year rollout of increasing that. So there will be a couple more bump ups before benefits start under the program. But right now it's around the mid $700, like $760 per week. So that's the most anybody can ever receive under the program, regardless of what their salary is. And then that funding is 0.5% of an employee's wages. And the default and the state program is using 100% employee coverage. And so we'll talk a little bit later about if you use a private plan, what that means for funding options and how that gets paid and accounted for. But the default for the state program is that the coverage is 100% employee funded. All right, we can go to the next slide, please. I think the biggest thing to hit on here, and I'm sure Andrea talked about this because I've heard her talk about it many times before, but this coverage is mandatory coverage. And so if you are an employer that needs to provide it, that you have Connecticut eligible employees, you have to provide the coverage, whether it's through the state plan or a private plan. There's no option to sort of say yes or no, or to let certain employees opt in or opt out. It's a mandatory implementation. So if you're an employer, you should be thinking about who are your employees that work in Connecticut, and then even more specifically, who are your employees that you pay Connecticut unemployment tax for? The state of Connecticut does a nice thing. They tie that financial eligibility test to their unemployment statute. So it's the same earnings test. So if you make unemployment tax payments for certain employees in Connecticut right now, those are your employees that are likely going to need the paid family and medical leave coverage as well. The private plan option, so right now is the time to start thinking about and making decisions around whether you want to use the state plan or a private plan. And here in that maroon box are just some of the kind of core components to think about as you're making that decision. We'll talk about some of these in more detail on future slides. But the state has published private plan requirements right on their website. And the document is nice. It's comprehensive. It explains what you have the responsibility to do as an employer if you go private. In a nutshell, you have to make sure that the coverage is at least as good as the state coverage and doesn't cost the employee any more than the state coverage. Those are the core components. You also have to register on the state website as an employer with the state. You actually have to do that step whether you use private coverage or go through the state plan. And the website is open to take those employer registrations right now. So if you haven't done that already and you know that you have Connecticut employees, it's a great time to go on to ctpaidleave.org and register as an employer. The process is pretty simple. It takes under 10 minutes, and you'll designate someone from your company as like the state contact person. You'll give them a little bit of contact information, and you'll let them know sort of your initial thoughts on whether you're going through the state or a private plan. It's not a absolute definite decision at this point. You have another couple months to finalize that initial decision, but they'll ask for a preliminary indication. You have to, if you go private, you have to host an employee vote, and we're going to talk specifically about those requirements and what they mean. But that is just something to be aware of. It's very unique in Connecticut. Most states don't have any type of vote requirement to go private. Certainly creates, an additional challenge for employers. It's not insurmountable. There are resources and things to help you host that, but it's just something to be aware of and the requirements associated with it. And then at some point, we hope it's in the next couple weeks, the state is actually going to open to start receiving full private plan applications. And so if you do choose to use a private plan for your coverage, you'll go back on and you will show proof that you hosted the employee vote and do a few other things as well in a detailed application form. And then the state will approve your private plan application. All right, you can go to the next slide. Before we get into more of the specifics of the private market and private plans, I just wanted to hit on a timeline high level. I think this is just helpful for folks to see what the next few months and the remainder of the year will look like leading up to the 1/1/22 implementation. You can see Q1 2021 is a really, really busy time for the Connecticut program, and it seems counterintuitive to folks sometimes because the benefits don't start until 1/1/22. So it feels like they have a lot of time. But Connecticut set up their program similar to Massachusetts with a year of pre-funding for the state plan. So if you as an employer are going to go with the state plan for your coverage, you actually need to start thinking about state contributions already. So you could have started taking employee deductions from their paychecks as of 1/1 this year. And then you'll start, if you use that state plan, kind of a rolling quarterly basis, remitting your premium to the state for the coverage. So again, those deductions could have started in January 1st this year. And then in April, you'd be submitting like your first quarter deductions to the state, and, on a go forward basis, it'll be quarterly. What I have sort of listed in the middle of those two things are some of the things to consider about private plan applications. And if you do know at this point that you want to go with a private plan, then you need to start getting the items together that I just mentioned and that we'll talk about a little more in detail, and getting ready to submit that application once the state opens up their website to do so. We did hear yesterday that they're doing a little final testing, but it should be very soon for that. So you can start getting the pieces together that you need. And then you do have until March 31st to get that private plan approved with the state. And then if you do it by then, you can avoid paying any of that pre-funding period into the state program. So you essentially can get that approval before March 31st. Then you don't have to worry about state premium contributions for this year. January 1st, 2022 is when benefits start under the program. And then you'll see this may be a little peculiar to you as I say this, but the employee notice requirements actually aren't slated until July 2022. That was the way that the legislation outlined when employees needed to receive certain posters and notifications. Has a lot of us scratching our heads because typically states put their employee notice requirements before the implementation of the program so that employees have notice that things are coming. So we'll be interested to see if the state updates that a little bit or imposes other requirements before then throughout the course of this year. And already we've seen they've posted on their website not a mandatory notification, but sort of a nice to have notification for employees. If you are going to start taking the deductions this year, that sort of lets them know that that's happening. So I think they'll update probably their stance and some recommendations around notice requirements as we go through the coming weeks and months. Okay, we can go to the next slide. All right, so if you do choose to file for a private plan exemption, you'll want to hit that first step that I mentioned where you go onto the Connecticut paid leave website and register as an employer with the state. Once you complete that, you'll get an email that has instructions and things like a registration number that's individualized for you as the employer. And so you'll hold on to that for now. And then you'll want to start putting certain things together for that complete private plan application that I talked about, so that as soon as the state starts receiving them, you'll kind of have everything in order. So the first is a declaration page. And anyone that's familiar with the Massachusetts paid family medical leave program and the private market there will hear some similarities. But essentially at this point in time, every carrier that's an approved private carrier with the state of Connecticut, so like Guardian is one, it's an example, it's us, we file a declaration with the state that says, yes, we want to have a private Connecticut paid family and medical leave offering. Here's some information about our company. And then we commit and we sign to saying, the policy we put in place is going to meet or exceed all of the state requirements. And we, promise to the state that we're going to do certain things to make sure that we have a compliant product. So we file that declaration. Every carrier does that's going to have a private plan. The state approves it. And then when you decide who you want to use for a private carrier, that carrier will give you a copy of their declaration page, and you'll use that with your application. So if you came to Guardian, got a quote for a private Connecticut paid family medical leave offering, wanted to move forward with that, we would give you our declaration form, a copy of our declaration form, and that will be used as part of your application. The other piece that you need to start thinking about and preparing is, it's called the Plain Language Guide. It's published right on Connecticut's website. We also have the link to it if anyone needs it after the meeting today. But that's a document that the state put together that needs to be given to employees before they vote. And it outlines the requirements under the program. It outlines their choice, going private or through the state. And it just essentially is intended to give them some background information on why they're voting, what the vote's for, and then what happens if they use private coverage. So again, that's published by the state. It's on the state website now. And that needs to be shared with employees 2 weeks, so at least 14 days before you host that actual vote. And then you need to host the vote. And that is something that you have to provide. You have to provide the ability to vote to all of your Connecticut employees who would be eligible under the program. And we'll go right to the next slide and we'll talk about some of the specifics of that vote requirement, because I know that it is causing some angst for folks as you think about doing something like this and hosting something like this. So the rationale for why Connecticut put this in place for private plans is because the default is that it's employee paid coverage, with that 0.5% of employees' wages being taken from the employee's paycheck. They wanted to give employees a say in whether they establish that coverage through the state plan or through a private plan. So that was the rationale for the vote. I think they're, throughout last year, and as the regulations were promulgated, I think there was a lot of discussion on whether this was really something that was going to be more of an administrative burden than helpful. And there's certainly, many folks who represented different sides to this, but whether, this is what happened. So this was the result of that. So we don't all love it. We know that for sure. But it is what's in place, and the state has confirmed for year one, there's not going to be any wiggle room here. So we'll see if in the future this vote goes away. New Jersey had a similar one. They ended up getting rid of it because administratively it was difficult to handle. But for Connecticut right now, it's here to stay at least for year one. Good news is the state is being very reasonable in terms of how it can be conducted and ways to do it. So we've actually even heard Andrea and other representatives from the state say on webinars multiple times that SurveyMonkey is okay to use. So really employers have quite a bit of broad discretion here to pick a platform or a service that they're comfortable with, or maybe that they already even use from an HR perspective to host other votes. So there's quite a bit of leeway there in you having the ability to pick something that you're comfortable with or something that you feel comfortable using for your employee workforce. But we know that the vote has to be extended to all employees that work in Connecticut. And this little detail here seems like a small one, but it's really important. Even those out on leave at time of vote. So if you have Connecticut eligible employees who are out of the office for whatever reason, when you're getting ready to conduct that vote, they still have to have access to the vote and the ability to vote. The vote has to be anonymous, but you have to be able to keep track of the results from a totality perspective. So you have to be able to verify with the state that you got the number of yes votes needed to move forward. And the majority needs to approve the private plan, and majority here is defined as 50% plus one of your Connecticut employees. We get this question a lot, right, on whether it's sort of an active or passive vote requirement. And so it's just important to spend a minute here. It is, so if you take an example of, say, you're an employer and you have 100 Connecticut employees that would be eligible for the program, all 100 of those employees need access to the vote, and they need that plain language guide 14 days before. They all need to get the link for the vote. And then you need to have 51 yes votes to move forward, even if only 52 people vote. So you could have a really, really low participation rate, and a lot of folks just ignore it or say, what is this, and not respond. So it is an active vote in that regard. You need to have 50% plus one of your employees come back to you with a yes vote for you to move forward. As I mentioned, though, the state's being very flexible about options. They've said online options are fine. As long as it's an anonymous vote, there are no restrictions around what type of methodology you can use. We at Guardian have access to some resources that can help employers if you have specific questions about how to host the vote or which platform might be best for you. So we're happy to help there too if folks have questions. And the vote in and of itself is pretty simple. It's one question. It's, do you approve the company's private plan to provide benefits under the Connecticut Paid Family Medical Leave Insurance Act? And it's a yes or no question. And that's the only question that has to be asked. So at least in terms of putting the vote together, a pretty easy question, and it's a yes or no question. All right, we can go to the next slide, please. Okay, so now to get into the meat and potatoes a little bit more, and I know why a lot of people are here today to talk about that decision and what are the pros and cons of going with a private carrier or going with the state plan. And there's certainly a few different things to consider here. This slide right here just shows you high level some of the initial benefits of using a private plan, and we'll talk about some of these in greater detail. But these are the big ones, just like the aha ones, right, that I always like to talk about first. So we know when you use a private carrier for a state mandated coverage, you can coordinate things well with your other lines of coverages you have with them. So you can set up like a single intake so that, say you have short-term disability, FML, the state mandated PFML coverage, you're going to provide some ease of use for your employees and at the employer level as well, because that employee can call into one place and all of their leaves they may be eligible for are set up. So from an administration perspective, it really kind of lowers the burden there a lot for employees and for employers as well. Kind of in the similar vein, one medical certification process, when you have a private carrier and you have other lines of coverage with them like short-term disability or things like that, there's a lot of information sharing that happens. So the same resources are going to review eligibility under the programs. an employee's doctor only has to be bothered one time for the information, because that information is going to come in, and the claims area can review that and make an eligibility determination for all of the coverages they may be eligible for. Those last two here just speak more to private insurance carriers' overall expertise in this space and in the disability space. When you use a private carrier for a state paid family and medical leave coverage, you just have access to a lot of really well-seasoned resources that have seen programs like this implemented before, that are very well versed in corresponding disability coverages. And so you have really, accurate, thorough, and all-encompassing clinical reviews, vocational rehab consultations, return to work assistance, work incentive benefits, and things like that will help your employee kind of recover as quickly as they can, set up the things that they need to with their family and their own health so that they can get back to work, and then assistance with that return to work process. All right, I'm going to spend a couple minutes talking about an example. The next couple slides will show an example of what happens when you use like the state plan for PFML coverage and versus when you use a private carrier. And then the next couple slides are intended to try to give you a little bit of a visual demonstration of the confusion and the administrative burden that can result, and why that's simplified with private plan. So this next slide takes an employee example that could work for any of you that are on the call today, right? So we have Joe here, and he's injured in a car accident, and he needs to take time off from work to recover. So this scenario here presumes that maybe this employer has Connecticut coverage through the state plan. Maybe they have their short-term disability coverage through an insurance carrier like Guardian. And then maybe they do in-house FML, ADA, and other leave management tracking. So when somebody like Joe gets injured in a car accident, he needs to call his STD carrier, his employer's STD carrier, to set up his STD claim. He needs to call the state to initiate the corresponding medical leave claim under the Connecticut program. He needs to call his employer so that he can figure out what he needs to do to set up his leave of absence from work and fill out any needed FML paperwork. And so you can see, right, if you look at Joe as the middle blue circle there, Joe's injured, Joe's not feeling great, and Joe has to spend quite a bit of time setting up all of the components of the leave to make sure he gets paid on time, his job's protected, his insurance continues, and all of those things. It's not an easy task to put on somebody that's recovering, especially during a medical episode. And the same can be said for PFL as well, right? It's not an easy task to put on somebody that's already in a taxing family situation. Over on the right, you can see we just outlined some of the core accountabilities for each year, just as a way to illustrate how complex this can get and how quickly. So in this situation here, where there are all these various carriers and coverages at play, you're going to have the employer here who's reviewing the FML decision, right, and job protection and the leave management and tracking of that leave. They're going to have to figure out, like, if the employee does get approved under the state plan for the Connecticut plan, how that works with any of their corporate policies. They're going to have to manage the FML leave. They're going to have to track the leave entitlements, right, and figure out if later in the year that employee, what they have left, if they need to take leave again, and things like that. And while that's all going on, as if that isn't enough in and of itself, right, you're going to have that insurance carrier who has the STD plan, reviewing the STD plan, making the STD determination, paying the employee for the STD, tracking the STD claim, talking to the employer to figure out if the FML leave was approved and how that's going to work and integrate. We also missed one on here. You're also going to have the STD carrier figuring out if there are offsets for the Connecticut payment. So there's a lot going on there as well. And then from the state perspective, the state is going to be the one reviewing the Connecticut PFML eligibility, paying for the Connecticut benefit, managing that claim, reporting back to the employer on that. And so you can see all of these different roles and responsibilities. And when you sort of like divide them up under different carriers, the complexity grows exponentially. And the other thing that happens is you end up with different carriers and different organizations asking people for the same information over and over again, right? So you're going to have, as an employer, you're going to have the state contacting you for eligibility information for the Connecticut plan. You're going to have the insurance carrier contacting you for eligibility information for the STD claim payment. That employee is going to have to send medical records from their doctor to the state and to the insurance carrier. And that doctor's probably going to get a little annoyed, right? And all the paperwork they have to fill out for various things as well. So you can see here how quickly this gets really complex and confusing for both the employee and the employer. So the next slide shows what happens when you use a private insurance carrier for all of those coverages, right? And that could be for your smaller employers that don't have to worry about FML. That might just mean thinking about organizing your short-term disability and then your Connecticut paid family and medical leave together. But that could also mean thinking as broadly as putting your FML and ADA and other absence services with that insurance carrier as well. But so when you think about coordinating those offerings using one insurance carrier here, you can see how it gets simpler. And so this scenario is same situation, Joe. Joe's been in the car accident, and this shows an employer that has the Connecticut paid family and medical leave coverage with a private insurance carrier like a Guardian. They also have their STD coverage with us, and then their absence coverages as well. So Joe's injured in that same car accident. He needs time off to recover. He makes one phone call to his insurance carrier, and then the insurance carrier is doing all of this. So they're going to set up the Connecticut paid medical leave claim. They're going to set up the STD claim. They're going to set up the FML leave, all from that one phone call. They can even do things like warm transfer to EAP if you have that on your plan, right? Joe might need some financial or emotional support as he recovers. Carriers can do things like that. We notify the employer directly that the leave's been initiated, so that employee doesn't have to make that additional call. We will reach out and work with the employer directly to figure out if there's any eligibility information needed and for what leaves. We'll reach out to the provider. It's one set of medical information we'll need, and we can review that and then make decisions on the various leaves and entitlements that they may be eligible for based on that one copy of medical information, so we don't annoy the doctors and the other resources involved in the absence. We can track overall entitlements under the program, so FML, ADA, STD durations, and then also the durations under the Connecticut program. We can keep track of that so that if the employee needs to access leave later in the year, we can tell employers very quickly, does that employee have any time left to take under this? Yes or no? What's their allotment left? And things like that. Private carriers can also give pretty detailed reporting on all of the different programs and products you may have with us, but specifically related to Connecticut, it's definitely a distinction here because the state doesn't give robust reporting, is not going to employers in terms of claim usage and things like that. So private carriers like Guardian have access to give employers that type of information, help them keep track of the benefits, how frequently they're getting utilized. And at Guardian, we even have details down to like what employees are taking what type of leave and when, what are trends and things like that, so that you as the employer can have a really good understanding of utilization and things like that. So you can see here that in this situation, the employee Joe, right, he has that one call to make, and then he can spend, the majority of his leave resting and recovering, right, especially since he's recently had a medical episode. You as the employer in this situation too, can also be relieved because a lot of the administrative burden associated with having more than one carrier or organization in play is sort of taken off. That stress is taken off. And then Guardian or your private carrier that you use can shoulder a lot of that burden. Okay, we can go to the next slide. This slide is just intended to hit some of the next steps to think about as you prepare for Connecticut in general, whether you go private or through the state. And I think, I've hit on a couple of these already. But I think the overall message here is a point that I made earlier. It's just, even though it feels like there's quite a bit of time until the program goes live in 1/1/22, there's still quite a bit to do before then. And the more you can sort of keep yourself up to date on knowledge of the program, how it works, and then information on your decision, whether you go with the state or private, and how that impacts your employees, the better you set yourself up, right, from an employee engagement perspective. And so if you haven't done so already, it's definitely the time to figure out who your eligible employees are and then register, like we talked about with the state. It's also a really good time to kind of buff up on all of the paid and unpaid leave programs that impact your organization. A lot of you on the call probably are just in Connecticut. Some of you may have employees in other states, right? And this landscape in general has become increasingly more challenging for multi-state employers. So if you have Massachusetts, Connecticut, and New York employees, you have 3 different state PFML plans that you have to manage right now. So just make sure you have a strong understanding of which programs impact your workforce. And then especially in Connecticut has several unpaid leave laws already in place. And states run the gamut on this. Some states don't have any in place. They just rely on the federal FML. Some states have quite a bit. And so Connecticut, falls into that bucket of having quite a few unpaid leave laws. So they have an unpaid FML Act already in place that will stay in place. They have that unpaid family violence law in place, like I talked about. They also have a mandatory sick pay law in place where employers with over 50 employees have to give their employees 7 days of sick pay every year for their own conditions. And so all of these laws are already on the books in Connecticut, and the state's working through some of the integration issues with them. They've said most of the unpaid leave laws are going to stay on the books and not go away. The sick paid leave law, they still have a little bit to address in terms of how that will integrate sick pay and things like that. But it's just a really good time to work with your HR or your legal staff to make sure that you're really up to date on all of the other laws in play in Connecticut and how they may work together. And then I think in general, it's just never too early to update your employees' policies and handbooks. Even though the benefits don't go live until 1/1/22, it's never too early to let your employees know that this program is coming, to help provide resources to them if they have questions. The more you know about this program, the better equipped you can be to answer employee questions as they come up and prepare for leaves appropriately. And the more people in your organization, managers, HR teams that are aware of their requirements, it just positions yourself better to handle the implementation of this program when it goes live. So these are best practices now and throughout the year as you think about preparing for the program and things you might want to review and calibrate on as an organization. Okay. I think we have quite a bit of time left for Q&A. I know it was quiet during the call, but I'm sure folks have some questions in their heads, so feel free to ask any or put any in the chat window if there's something that would be helpful to clarify or just anything that I didn't cover.
Joe or Rob, have you guys seen any questions come in?
I've been keeping an eye on the chat. There's no questions as of right now, so give it a couple seconds.
Yeah, Margaret, while we're waiting, let me just ask you a question. This is Rollin. In Guardian's work in this area, what was the decision to come into play here in Connecticut? And does it reflect, you see this as a real opportunity as a market to package things and streamline things for employers? And is there a reference point with other states that you've done this that you can comment on, private versus state? Any backdrop? Just curious as to see what might have been the thought process in the organization and any past experience in other states.
Yeah. So I would say the overall messaging and guidance at Guardian is that we want to have fully insured and self-funded options for all of these state plans where we're able to. And so we already have plans in place in New Jersey, New York, Massachusetts. And so as we were evaluating whether we'd have a Connecticut offering, we had to think long and hard about some of the program requirements because Connecticut's a little bit unique. But the overall direction we're going as a company is that we want to be involved in these products whenever possible. And it's mostly what you mentioned from like an overall integration perspective, right? We want to make sure that especially like our short-term and long-term disability customers have access to these benefits through us if that's the route they want to go, so that they can kind of combine that overall package and have that integrated claims experience that I talked about. We also have spent a lot of time and resources in the last couple of years, and we're going to continue to really put ourselves out there as an absence leader. We, in the past have definitely had like smaller customer size base for us, and we're moving kind of into like a bigger and broader absence space. So that's exciting. And part of our strategy there is making sure that we can have paid family and medical leave solutions. So that's why we wanted to be here for sure. And then lots of learnings from New York and Massachusetts for sure, definitely, right? I think we've figured out a lot of different things that work and don't. One key example I think about is now we've really realized that, okay, we want to set up the same claims payers, the same claims teams to pay the corresponding STD claim if there's a corresponding state medical leave claim, because that takes our integrated experience and it makes it even more integrated because the same person's going to be paying both of those claims. So we continuously evaluate how things are going in the states where we already have programs to see what's going to be better and to make things even easier as the new states come down the pipeline.
Great. Thanks, Margaret. I think we have a couple questions.
Yeah, Margaret.
Could you read those?
Yeah, sure. Let's see. I would guess that there is a fee associated with using a private plan. What type of fee does Guardian charge for it?
Yep. So that's a great question. There's no fee with the state to file a private plan application. So you just essentially pick your private carrier that you want to use. If you're talking about fully insured coverage, we'll talk about that first. We would issue you a quote for our fully insured coverage, and it's based on your employee demographics. So you would send us a census with your Connecticut employees and their salary. And then we run a quote through our underwriting team and produce it to you. And then you review it and determine if that's something you want to move forward with or not. So depending on the demographics and what your employee workforce looks like, sometimes that rate could be under the state rate or right around the state rate. Other times it could be a little more than the state rate. So there can be some variance there depending on your demographics. So you couldn't really give a standard answer on that because it will depend on your workforce, but we're happy to provide sort of illustrative quotes for anyone that might want one to see where they're coming out in that price point.
And Margaret, correct me if I'm wrong, but this has to be packaged with an existing line of coverage, correct? So we can't just write the Connecticut Paid Family Medical Leave Administration product, if you will, with you without packaging short-term and or long-term disability. Is that right?
So we tie it to one other line of coverage. We stopped a little short of requiring that it be STD or LTD. So there's some discretion there. Like if you wanted it to be dental or vision or a voluntary product, that's fine. You just have to have at least one other line with us by the time the program goes live on 1/1/22.
Great. Thanks, Margaret.
Yeah.
Great.
Is there another question?
Yeah. Do you know if PFML tax is due on 3PSP, i.e. STD benefits received from employee by the insurance company? If so, should insurance company be deducting tax and paying to state?
Can you read the beginning part of that question one more time? Sorry.
You know if PFML tax is due on 3PSP, i.e. STD benefits received from employee by insurance company?
I don't know what 3PS3 is. I'm sorry.
Definitely. Chime in. Third-party sick pay.
Oh, so you're asking like how the tax is coded from like a payroll perspective, or how it will be categorized?
Joe, can you unmute Stephanie, or Stephanie, can you unmute yourself to speak? There we go.
Yeah, sure. Yeah, we were just wondering if I know that when an employee receives short-term disability benefits, third-party sick pay from our provider, Social Security and Medicare comes out of it. So the question is, is paid family leave that tax? Should that also be coming out of it? And if it is, I'm assuming the insurance company should be accounting for that.
Yeah. Yes. Yeah. Thank you for clarifying your question for the non-financial background.
Sorry about that. Thank you.
That's okay. So great question. So for our private Connecticut paid family and medical leave product, we offer a few different tax reporting options, and we do offer like a FICA match service like we have on our STD product. There is a little bit of a pricing load for that, but we can offer up to that level. We can also offer basic services like just issuing tax reports at the end of the year as well for your employees who take it. So we do have a variety of different services. The issue high level on the tax pieces with Connecticut right now is the state's waiting for the IRS to issue guidance on whether the premium contribution should be taken on a pre or post-tax basis. And so what that means for the taxability of the actual benefit. Massachusetts, which has already gone live, is still waiting for that clarification from the IRS as well. So that's certainly a piece to the puzzle that we need to gain clarity on from the IRS. But we are proceeding with having all of the options available so that employers can make the choices that they want to make so far. And then if the IRS guidance adjusts any of that, we'll adjust.
That's all I see for now.
Hey, Margaret, one last commentary. One of the things I'm hearing on the street is that there is a concern with the nonprofit sector that some of their, lower paid workers who are paying into this, and I shouldn't say lower paid workers, some of their workers who are paying into this might view this as a benefit that is sort of deserving of them to take advantage of. And there's some concern about abuses and the quality of claim control because, when an employee is absent, that's disruptive to the workforce. And many nonprofits already struggle with retention of their workers and, continuity of the workforce and all those challenges that exist. In my heart of hearts, I'm thinking that an insurance company is probably going to do a better job policing claims, maybe a little bit more rigorous on what qualifies for a claim than would be the state who's going to be brand new at this. Any thought process on that or commentary? Obviously I'm an insurance guy, so, that's probably natural for me to think versus the state, but just give a little commentary on that if you would.
Yeah, it's a great question, and certainly something I'm hearing about quite a bit already as well. I think generally when states roll out these types of programs, the claim utilization is very high right out of the gate. We know that from New York, Washington, DC. Employees that know they have access to use them are ready to use them. Certainly, as you mentioned, for the lower salary wage earners that know they're going to get a really good percentage of their income replaced, there's even more incentive. But so we just think about like the basics of it. They're used very highly. So that's something that all employers should think about and prepare for the fact that this will be a benefit that gets utilized pretty regularly right at the beginning. I think you hit the nail right on the head in terms of another benefit that the private insurance market can offer here. We're bound by the same definitions. Our private plan has to line up with the state in terms of definition of serious health condition, definition of covered family member. So we can't really provide like a more rigorous review from a definition standpoint, but our resources, to your point, are definitely more seasoned and more regularly review these types of claims, are definitely well trained to pick up fraud, have dedicated special investigation and fraud units that can help in situations when unfortunate circumstances arise with that. So I think you're right. I think, just the private insurance carriers are a little bit better positioned to sort of monitor the potential for misuse, and then work with employers directly as soon as those situations present themselves to get them addressed in the best way possible. And we've seen with other states, not to say anything negative at all about the state, because they're doing a tremendous amount of work and on this now, but the inexperience comes into play sometimes, right? Washington State is a prime example of this. Their plan rolled out last year, and they just weren't truly prepared for the volume they were going to see. They had quite a bit of a backlog for a while in terms of processing claims. They needed help with getting up to speed on a lot of these pieces. So I think, that's definitely something to think about as well. These are new programs. A lot of these states are implementing brand new state agencies to handle them. And so when you think about going with an insurance carrier that's been around, 50, 100 years, right, and has done this for a long time, there are certain things that we know to expect and that we can plan for without having a sort of rough period at the beginning.
Great, thank you. Rob, any other questions?
No, I think we're all set.
All right. Well, Margaret, thank you so much for joining us. You did an exceptional job. Really appreciate your insight. If anybody has further questions or would like to receive proposals, we'd be happy to provide you with those resources through the Schuster Group. Rob, do you want to talk a little bit about some of the upcoming events we have, just real quick, and then we can let everybody get back to work?
Yeah, absolutely. Part 3 of the series will be taking place on Thursday, February the 4th. And our next webinar will be taking place next week, Thursday, January 28th. And it'll be focusing on how to increase your fundraising efforts. So as you all know, our webinars are complimentary, so feel free to sign up via our website. And if any of these topics aren't in your area, obviously your coworkers can sign up and attend. Lastly, as Rollin said, our Tango partners are here to help your organizations and have created exclusive programs and pricing for our members. So feel free to take advantage of what we have to offer through Tango, and all the information is on our website. So thank you all for attending today.
Thank you, Rob. Well, without any further questions, we will be signing off. Have a happy and productive day, and we will see you soon, I hope. Thanks so much, everyone. And Margaret, thanks again.